Today, I will test an indicator 7,000 times on the Forex market that gave me a solid win rate above 60% with a high return on investment, and then I will create a reliable and very profitable strategy for it. Stay tuned to see all the proven results. Firstly, I want to make a public thanks to my subscriber Anthony James for sharing his opinion in the comments section. Today's video will be based on his request. Yeah, that's right, I will test the QQE indicator to see his performance. First, I will test it alone and then on a simple system that you can follow. If any of you would like me to test a specific indicator or strategy, write it in the comment section, and who knows if I will make a video dedicated to you. So, as usual, I'm on TradingView, which is a platform that I use to backtest every indicator and strategy. I will leave the link in the description. For the backtest process, I will use an algo that I created. I will perform it on the daily time frame, on the 28 most common Forex pairs, and using in-sample data consisting of the years 2010 to 2014, 2016, 2018 and 2020. It's the same sample setup as in my previous videos, so in the end we can compare all indicators and strategies. Let's now add our QQE indicator. I will use this one here, QQE MT4 by Glass. The settings that I will use are the default ones, which in this case are 14 for the RSI, 5 for the slow factor and 4.236 for the QQE. Also, I will change the yellow line, which is the RSI moving average, to green. Using this indicator is quite simple. Whenever the RSI moving average line, in this case the green line, crosses above the fast ATR line, the red one, it is considered a long signal, and whenever the opposite happens, it is considered a short signal. Now I am going to search for the ATR indicator and I will use it with the default settings. I use the ATR indicator to place the stop losses and the take profits on every single trade. For stop losses, the value will always be 1.5 times the ATR pip value, and for take profits, 1 times the ATR pip value. So, I just finished coding this indicator on my algo with the respective buy and sell orders. And another important point in my code is that whenever the indicator gives a new signal before the previous one is closed, the algo will close the position that was already open and enter in the new one. Let's see if everything is okay in our code. Here we have an example of a long signal. The algo considered the entry point after the closure of the signal candle given by the QQE. The stop loss value is 1.5 times the ATR pip value, in this case 1.5 times 68, which is 102 pips, and for the take profit the value is 1 times the ATR pip value, so 68. This trade will be a profitable one. The take profit was it here. Next, we have an example of a short signal. The algo considered the entry point after the closure of the signal candle given by the indicator. The stop loss value is 1.5 times the ATR pip value, in this case 1.5 times 65.5, which is 98.3 pips, and for the take profit the value is 1 times the ATR pip value, so 65.5 pips. This trade will be a losing one. The stop loss was it here. As you can see, our algo is working correctly. The risk per trade that the algo will use is 2% in a bankroll of $100,000. The algo also correctly respects our in-sample data. The arrows that you see are the entries and exits from every trade signal. To point out the results, I will use the same Excel sheet I used in the last videos. I will now speed up this part of the video a little bit, but you can slow it down to see the results of every single pair. I see you in a bit. Here are our backtest results, and we can see that after more than 7,000 trades, our QQE has an average win rate of 60.61% and a profit of 147%. So, we can see that is a profitable and solid indicator. In our ranking, the QQE indicator will be placed in the first spot, since it has the highest win rate so far. When comparing different indicators with positive returns, the most important thing to compare is the win rate, because the profit we can always improve using simple techniques, like applying a stop-loss trailing system to it. Now, at the subscriber's request, I will create a system that will improve the indicator's efficiency and which will be simple for any of you to use. So, the main indicator on our system, it's easy, will be the QQE indicator with the default settings. Next, I will add a secondary confirmation indicator, which in this case is the untrend price DPO indicator. For those who saw this video about the DPO, you know why, but for those who didn't see it, I will leave the link in the description. And I will use a period of 21 on it. Lastly, I will use too a 25 weighted moving average to act as a baseline, which gives us information about the market's major trend. Now let's see the rules of our system. The trade signal is given by the QQE in the same way I explained earlier in the video. Then for a long signal to be valid, the DPO has to be green and the price has to be above the moving average. For short signals, the DPO has to be red and the price has to be below the moving average. For the stop losses and take profits, the calculations will be exactly the same. Now let's repeat the backtest with all these rules. I see you in a bit. Here are all the strategy's backtest results. In the same sample, now the number of trades was 3,138, the win rate improved to 61.41%, and the profit decreased a little bit to 131.06%. So we can confirm that the results are quite positive. The fact that the profit has dropped a little bit is not a negative thing, as the number of trades has dropped by more than 50%, and therefore this strategy is much more efficient than using the QQE alone. I also checked the average of the max drawdown, which for this strategy was 10.75%, which is acceptable in such a large sample. However, since these are the results of a strategy and not of an indicator alone, I will now proceed with one last backtest, an out of sample one. And why, you ask? Because by using an out of sample test, I will get extra confirmation of this strategy's efficiency. If the results are similar to the ones in the in sample, then we can conclude that the strategy is reliable to use in the real market. If not, then we will need to make some optimizations on it to improve its efficiency. The out of sample backtest will be made on the data from the years 2015, 17, 19 and 21. Let's jump on it. Here is the out of sample results. The number of trades was 1,506, the win rate was 61.66%, and the profit was 58.1%. Now let's compare the in sample with the out of sample results. To calculate the difference between both samples, I simply divided the total profit and the total number of trades by the number of years that each sample had. So 8 years for the in sample data and 4 years for the out of sample data. As you can see, the stats difference of both samples in average is below 10%, so we can conclude that the strategy is reliable and the results we had on the backtest will probably continue to be the same on the live market. If by some way the results had a difference above 20%, we would have to change the settings of one or more indicators in order to try to keep similar performance in both samples. Although this step seems easy and simple, it is fundamental for the success of the strategy in the real market conditions. We can also conclude that this strategy has an average return on investment per year of 14 to 16%, which beats the benchmark of the S&P 500 index. And be in mind that I only used a fixed take profit, so the strategy is simple for beginner traders. If I used instead a trailing stop loss or 2 take profits, the returns will be much higher. Before using this strategy in real market, I advise you to prepare yourself on a demo account so that you can gain trust on the strategy and learn how to use it correctly. Always do your research before jumping into a live account, taking into consideration other metrics like the commissions and swaps of your broker's account. And that's it. I hope you learned something from this video, and don't forget to subscribe, share and like it to support me in bringing more content to you. Be well, thank you, bye bye.